Really, my focus is SUI with a little bit of Solana now. That's flipped because I was the other way around. I was, 80% Solana and 20% SUI, and I'm kind of flipping those around and looking to move even more towards SUI because I think it outperforms this cycle. And people will say, watching this, well, he's biased because he's on the board. No, I mean, yes, I get granted tokens from the board. They're all locked up. I don't do anything. My actual capital, I'm a mercenary for. My job is to maximize the returns in the safest possible way. And I have, over time, been allocating to SUI based on not only what you read, the fundamentals and what's happening and the on-chain activity, but also just the price action versus Solana and Bitcoin and ETH. And it's like, it looks good. I own a very small amount of Bitcoin that I've always had. And then I have ETH, which is only in high-end art NFTs. So I don't own any ETH other than art.
Raoul Pal offered a fascinating insight into the upcoming altcoin season. According to Paul, 2025 could be a make or break year for altcoins, as many coins are poised to significantly break above this level. While exploring technical analysis and market behavior, Paul vividly describes the outlook and risks facing cryptocurrency investors. Paul describes the cryptocurrency market as approaching when he calls the banana zone, a period characterized by exponential moves and heightened speculative activity. In this phase, altcoins typically show more notable gains in a short period of time than more established cryptocurrencies like Bitcoin and Ethereum. He highlights the potential for dramatic increases in wedge patterns found in coins like Solana, Ethereum, and XRP. These wedge patterns are among the strongest formations in the cryptocurrency world. He particularly highlighted Solana's breakthrough and continued consolidation, foreshadowing a further notable rise later in the year. Similarly, Ethereum is on the verge of breaking out of its wedge pattern, signaling that a significant pullback is imminent. Paul highlights the power of Solana and SUI, both of which he believes will outperform other cryptocurrencies. Citing its inverted head and shoulders breakout pattern and long-term potential, he calls SUI the chosen one of this cycle. Paul also remains positive on Dogecoin, which he considers a mainstay of the banana zone due to its recurring cycles of consolidation and explosive expansion. Dogecoin, with its meme status and broad appeal, has consistently outperformed expectations. Paul rightly noted that if the charts hold, Dogecoin could even suggest that it is a better coin than Bitcoin, a claim we can't ignore. According to Raoul Pal, it's the best time to focus on SUI over Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
We've only just started the liquidity cycle. We've only just started the business cycle. So it won't be short. Will it be towards the back end of the year, which will be normal? Or could it be back into 2026? And then what does 26 look like? Maybe less frantic than the last cycle, which we saw a lot of collapses and a lot of things going horribly wrong. But you've got to remember how money works in the economy. Right now, there's all of these pension plans and all of these private equity funds and all these VC funds. They've had no exits. Nothing has gone public. Things like Stripe, still not public. Kraken, still not public. So that we need to see the capital markets open. We need to see money get recycled, and then money can move through the system. So that's one of the issues. So a lot of the crypto-based investments is from the crypto market that releases as the capital goes higher. But of the traditional investors, there's still not enough money. So we're having to bring in new capital, and that might be the Middle East or a couple of others. But we're not getting the traditional investors fully involved. They just don't have money right now. And that's a function of what I talk about when I talk about the business cycle. The business cycle, if you think about it, when the business cycle is expanding, it means people have more earnings, whether it's at household levels or corporation levels. Those profits and earnings get recycled into investments. And that's what drives a lot of this. So we're still at this point where we don't have everything in place to have a massive institutional involvement, but we are definitely seeing signs of it. Once we get the regulatory clarity as well, just a basic guideline, it'll accelerate further. So I only see acceleration ahead, but it just takes time.
Paul also highlighted that SUI, a Layer 1 blockchain platform, is preparing for a significant breakout after surpassing its all-time high. He noted that SUI has crossed the $5 mark and anticipates a strong price increase following this achievement. Paul also expressed optimism about Solana, stating that it has broken out of its channel and turned the upper boundary into a support level. He shared a chart indicating that Solana is now moving upwards against psychological resistance at its all-time highs. The long-term Solana chart looks very bullish. Paul previously stated that SUI would play a chosen one role in this market cycle, potentially outperforming Solana. In an interview, he mentioned that his support for the SUI project stems from his belief in its strong chances of success. Paul noted that SUI has begun to outperform major cryptocurrencies such as Solana, Ethereum, and Bitcoin. He warned his followers that while SUI has significant potential, it is also a risky investment, and stressed the importance of individual risk assessments. According to their analysis, SUI's price movements and overall market performance have reinforced their confidence in the project, with expectations of a notable rise in the near future. SUI's current surge and Paul's positive comments indicate that major developments could be on the horizon in the cryptocurrency market. Alternatively, Paul could hold substantial amounts of SUI coins and make bold statements to take advantage of their potential upside. Paul predicts life-changing wealth creation in the cryptocurrency space in the coming years. According to him, this crypto opportunity is literally the perfect macroeconomic opportunity of a lifetime. The next 2 years are very likely to generate life-changing money. Young investors, especially those burdened by student debt or who can't afford to buy real estate, have a unique opportunity to improve their financial situation. Paul's advice is to avoid FOMO, fear of missing out. Avoid leverage. Focus on mainstream assets like Bitcoin, Ethereum, and Solana. Be careful not to expose your portfolio to high-risk ventures. Paul described the launch of the Bitcoin ETF as a pivotal movement, akin to a rodeo scenario characterized by chaos and humor, typical of the crypto world. Paul said that the global cryptocurrency market capitalization could increase 100-fold by the end of this decade. It could grow from the current $2 to $2.1 trillion to around $250 trillion if cryptocurrency adoption patterns continue their current trajectory. If this happens, cryptocurrencies will become the fastest growing asset class in the shortest possible time. Other asset classes, such as stocks, bonds, and real estate, have market capitalizations of between $250 trillion and $350 trillion. Paul said that if the cryptocurrency user base hits the $3.5 billion mark by 2030, the market capitalization will reach around $250 trillion. Cryptocurrencies can grow in adoption and become a part of billions of lives where every transaction, including payments, is done through blockchain technology, he added. Edu Patel, CEO and co-founder of Mudrex, said he would not be surprised if this unfathomable figure became a reality. However, no asset class can grow following a linear trajectory. The market capitalization of the digital asset class has lost 20 to 25% of its all-time high and is barely above the $2 trillion mark. Market experts believe that cryptocurrency adoption could increase exponentially and that this asset class is likely to yield better returns over the next 10 years compared to gold and stocks. However, industry analysts said that investors should choose fundamentally sound cryptocurrencies and not just follow the latest fad. Many cryptocurrencies that are popular today could cease to exist by the end of the decade. Endorsing the new age asset class, he said that cryptocurrencies bring much needed diversification and alpha generating potential to any portfolio.